Dalal Street ends largely in the red. Nifty and Sensex fall for the 8th straight session. Banks outperform. Index gains 0.25%.
A string of listings on Dalal Street today. Anand Rathi share and stock brokers list with a premium of about 5%. Shesasai Technologies see minor listing gains while Solar World sees a listing pop, but the other two end below their issue price.
The Monetary Policy Committee is set to hold rates and maintain its neutral stance, according to a majority of market participants polled by CNBC-TV18. 60% believe RBI is unlikely to cut rates further in this cycle.
You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points, gear, and of course gear up for the next trading day. I'm Hormuz Patakia, with me Sonal Bhutra. Sonal, hi.
Hey Hormuz, what an interesting day, last day of this September series, and we did see the 8th continuous session of red on Dalal Street. And if we look at what contributed to those losses, a lot of them, actually Bank Nifty supported it, but we had some cuts coming in from consumption, energy, IT too did not do so well. A lot of stocks which were on our radar today, and we'll keep talking about that in greater detail. But a lot of mid caps which saw a big decline today, but Bank Nifty, that saved the day in some way.
Save the day in some way. And the other positive, if you want to count as one, is that we managed to save today's low. Although we made a lower low on the charts yet again, but we did not close below today's low, and that will be something that the bulls would be taking in as we go into the new series and of course the new month as well. But here's what we have lined up for you today on the show. We start of course with the top movers and shakers with Vivek. Man Industries was an underperformer today after the SEBI barred the company and 3 of its top executives from the securities market for a 2-year period. Meanwhile, Sammaan Capital continues to gain as the firm will consider a fundraising. Also on the show, Solar World listed with a premium of 10%. And last but not the least, we delve into the key market events to watch out for going into tomorrow's trading session. But here's our first segment of the day. And as always, Vivek is standing by the wall to tell us some of the big movers and shakers of the session. Vivek.
Well, good afternoon. Like you mentioned, another down day, but some positive, especially towards the later half of the session. What did very well in the session today? Well, the entire PSU banking index, have a look at it. The index itself was up 1.8%, and most of the constituents, in fact, all of the constituents today did very well in the session. Bank of India, Can Bank, Indian Bank, PNB, Union Bank, all of these stocks among the top gainers as far as the PSU banking index was concerned. Along with that, the Nifty Metal Index was the other set of all of the constituents there managed to see significant up moves. Look at Nalco, Hinzink, Vedanta, all of these stocks are among the top movers in the session. Hindustan Copper continued the stellar rally that it's seen over the last couple of trading weeks. Tata Investment Corporation, this particular stock, yesterday was a down day, but today had almost 17% strong volumes, the top NSE 500 gainer. And Blue Dart, company went ahead and announced a price hike effective Jan 2026. That stock higher by almost 3% today. On the other hand, quite a few laggards as well. One particular stock that clearly stood out was KPIT Technologies. This particular stock in the second half of the trading session saw a very sharp down move, ended the session low by over 8%. It will be important to see what exactly has transpired as far as KPIT Tech is concerned. Dixon Technology, yesterday a lot of the EMS stocks did see selling pressure. Dixon Tech, again, today was the second straight day where we saw significant selling pressure, one of the top laggards today. Jara Institute, a new listing, but a very weak listing for this particular name, down almost 15%. And exchange stocks saw, both BSE as well as MCX today saw significant down moves. In fact, mid of the trading session, you did see significant selling pressure emerge across both BSE as well as MCX.
Okay, all right. Those were the top stock movers. Thank you, Vivek, for joining us with that. Let's go across to our guest, Jay Bala, CMT at cashthekiosk.com, and Mayuresh Joshi, who is the Director Research at Market Smith India. Gentlemen, good afternoon. Thank you so much for joining in. Jay, let me come to you first up. Another day of lows, 8th consecutive session actually. What are the charts suggesting now?
Hi, Sonal. The Nifty is very close to an important support zone of 24,400 to 24,337. It's absolutely crucial it doesn't break. But the fact that the markets are hovering around it, that's not a good sign. The longer it hovers here, the chances of this support zone giving way is higher. If it were to break, that would probably lead to about a 1,000-point decline for Nifty over the next 4 to 8 weeks. But this doesn't impact the medium-term picture. I believe the April low will be well protected. And in 2026, we are likely to see fresh record highs somewhere in the region of 29,000.
Interesting. The other big talking point, of course, was the 4 important listings that took place on Dalal Street today. And the major takeaway, of course, that Anand Rathi listed at a premium, but most of the others, you took a look at Jaro, Sheshasai or Solar World, all of them ended below their issue price. Now, the major takeaway here is simple, that healthy IPO subscriptions do not necessarily translate into healthy listing gains. You take a look at the subscription figures here as well. For IPOs of their size, anywhere between 500 to 800 crore rupees, IPOs of a subscription of around 15 times to as high as 70 times for Sheshasai is pretty healthy. Healthy also because all 4 of them were open for subscriptions together simultaneously, and yet they managed to garner such subscriptions. But the listing presents a different picture, right? All of them listed in or around their IPO price. Apart from Anand Rathi, which built on to those gains, the other 3 listed and went on to close with losses. Of course, early days, just the first trading day. You can't say that those that listed at a discount will not do well. But of course, those who do it for a listing play was not the best day for such players. Of course, let's take that point with Mayuresh. Mayuresh, thank you for joining in. Any of these 4 you've looked at, Anand Rathi or Jaro or even Sheshasai?
Afternoon, Hormas. No, again, I think as you rightly pointed out, I think it's a wait and watch because the listing has now largely happened. Now it's up to the numbers delivery that these companies will give. And each individual company has certain headwinds and tailwinds for their respective sector and for the stocks as well. Capital market play, Anand Rathi, what probably goes through in terms of volume growth as it comes to exchange expiry is something to be watched out for. For Jaro, I think it is a very sound model, but I think how does that probably translate into better revenues going forward is something to be seen. Solar World, again, I think there is a huge runaway growth potential over the next few years. But how does pricing change? What kind of supply dynamics happen in the market as far as demand-supply dynamics are concerned when it specifically comes to end pricing itself? I think those are question marks that will be answered by not just the listing, but by numbers which will follow suit. And therefore, I think numbers will now do the talking for all these players.
That's true. It's the numbers that we'll be watching out for and the commentary as well, because right now it's been very positive, but how the macros turn out for these companies is important to track. Let's talk about a stock now. Man Industry tanked 10%. SEBI barred the firm and 3 of its top executives from the securities market for 2 years. There have been a lot of issues. The primary issue related to consolidation of their subsidiary. A lot of other compliance lapses as well. Nigel is joining us with what went wrong here.
Well, that's right. Man Industries is under pressure following the regulatory action. SEBI has barred the company and 3 of its top executives from the securities market for 2 years. The names include the managing director, Nikhil Mansukhani, the chairman, Ramesh Mansukhani, as well as the former finance chief, Ashok Gupta. Now, in addition, SEBI has also imposed a penalty of around 25 lakh each of these executives. The regulator's action, well, it's based on the findings that go beyond a single transaction of financial year, citing a pattern of conduct that disregards transparency as well as accountability. Man Industries, well, they have responded with a clarification. They are stating that the primary issue relates to non-consolidation of its subsidiary, which is Merino Shelters Private Limited, along with some minor compliance lapses between FY 2015 to 2021. They also add that consolidation of the subsidiary's financials started from FY 23 and 24. They go on to state that their order book is solid at around 4,700 crores. The company assures stakeholders that business operations continue unaffected. They maintain a robust order book and all their facilities are fully operational. Investors, well, they'll be looking and watching how Man Industries navigates this regulatory challenge and the current market pressure. Nonetheless, for the time being, a rap on the knuckles from the regulator, and that's why the stock under pressure.
Mayuresh, do you have any take on this number, this stock?
So, Sonal, again, I think this is something in the past, and this was always an overhang onto the stock because what will come out of the SEBI ruling is something that was always perturbing a lot of players onto the street. Now it's finally come out, but yet I think questions still linger. That corporate governance issues which have cropped in the past, is it completely gone out of the books itself? Is compliance something which is adhered to? And the management sounds very, very positive and very, very constructive on all these aspects. I was hearing them on a couple of your on the other business channels as well, and therefore I think they do seem constructive. I think the balance sheet probably seems constructive at this point of time as well. The order book probably seems well laid out, which probably means it gives revenue visibility itself. But I think you will have to wait through this crisis as it has come around when it probably comes to corporate governance. I think wait and watch. If the numbers probably are expected to better and the management commentary and some element in terms of corporate governance issues not cropping back again, I think that will give some confidence, but it will take some time.
It will take some time. And the other one, of course, that has been doing well over the last few sessions has been Sammaan Capital, and that continued its up move. The firm said that its board will be considering a fundraising on the 2nd of October, which is Thursday. And that's not all. ICICI Prudential has also picked up a stake in the company in a big block deal that took place yesterday. Gaurav is joining in with more details on this. Gaurav.
Well, yes, definitely. When we look at Sammaan Capital, this was the second consecutive day where the stock actually was trading higher. In fact, yesterday it was up more than 10% and today it is up more than 4%. And the reason being that company today said that 2nd of October is a date when board meeting will happen where they will consider and discuss about the fundraising via equity. Other than that, yesterday when we look at some of the triggers, ICICI Pru Mutual Fund actually bought around 43 lakh shares at a cost of around 152 rupees. So definitely two triggers which help the stock price to move up. Apart from that, if we look at fundamentals, now there is also a turnaround which is likely to happen because Mr. Himanshu Modi, he has joined as deputy CEO. At the same time, for FY27, company is saying that the legacy book is going to be in single digits versus what it is right now at 37%. They also say that the loan book is going to be around 1 lakh crore, which also implies 27% CAGR growth from here on. And at the same time, credit cost on a steady state is likely to be around 1%, which is currently at 3% if we compare first quarter of FY26 numbers. So definitely there is promising future which the management is speaking about. Now let's come to valuations. When we look at the valuation, it is trading at around 0.6 times. So definitely there is some headroom. Remember, for the last 5 years, the valuations have been sub 1%. In fact, the average 5-year valuation price to book value is 0.46 times. So definitely there was some discounting that the street was doing after 2019 crisis. But now, given that the stock is recovering, let's see if it is going to be any beneficial for investors. As of now, the stock is trading as at a higher point of time and also moving towards its 52-week high.
Thank you, Gaurav, for all those details. Jay, quickly, if you have any take on this particular stock and any stock from the financial space.
I mean, the PSU banks have been positive on, and they've been doing quite well. But Sammaan Capital, from a weekly perspective, that is a medium-term perspective, it's looking quite positive. The stock from the May 2022 low has gone up in trending fashion, corrected from there, and it's retraced to 78.8% Fibonacci retracement, which is typical of corrective decline, and it's starting to bounce from there. So I think Sammaan Capital has got considerable upsides, probably around 210, 220. Stop loss are about 134. The stop is a bit wide. Positive on Sammaan Capital.
Jay, Mayuresh, thank you so much for sparing time and joining us on the show today with your views on specific stocks on our radar. Take a short break. On the other side, we get to the top corporate voices and some key events to watch out for going into tomorrow's trading session. Stay tuned.
Welcome back. You're still tuned into Markets Forward. Let's now talk about the key corporate voices we had on our channel today. First up is Keystone Realtors. The management is upbeat about second and third quarter. Adds festive season will be much stronger this year on the back of GST rate cuts. There has been a strong walk-in demand, but the management adds rains acted as a dampener for demand as well. That's not all. The realtor is optimistic about Diwali and anticipates a bumper sale for homes, especially in mid-mass and premium segments. The company has seen an upswing in demand for 7 to 15 crore rupee homes. That's the segment that's working for them.
Now on to companies that marked their Dalal Street debut today. First up is Solar World Energy. The management says that it is focused only on the domestic market. It has plans to invest in a 1.5 gigawatt module manufacturing line, a lithium battery line and a 1.2 gigawatt solar cell line. It anticipates better margins once it starts manufacturing in-house. Currently, the margins for solar cells is near 14%, and the management adds that the margins are strong, but it should normalize soon. It also said that the company has seen demand and supply growing rapidly in the solar segment.
Let's talk about the other listing now. Seisha Sai Technology saw a muted listing on Dalal Street. Speaking to CNBC-TV18, the company's management said that it expected to see a 12% CAGR growth for its payment vertical. Also added that they enjoyed accelerated growth in Internet of Things, which they believe will grow the fastest. The company has also entered into the non-BFSI space. Its EBITDA margin is in the range of 24 to 25%, but profit after tax margins, they are around 15%.
And lastly, the management of Anand Rathi said that it expects the growth momentum to continue. It is anticipating a 20 to 25% growth in top line and expects growth in net profits to be in the range of 30 to 35%. Now, that's not all. Currently, the share of revenue is leaning towards broking business at around 60%. However, it intends to bring that down.
Okay, all right. Those are the corporate voices on our channel. But the big event tomorrow, RBI's MPC will announce its interest rate decision. Ritu is here with the key expectations.
From tariff tensions to GST cuts, a stronger than expected growth print, and even the potential fallout of H-1B visa restrictions on service exports, there's plenty that's weighing on the Monetary Policy Committee's mind as it gears up for its rate decision. According to a CNBC-TV18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy, despite having the headroom to cut because of the lower inflation, and a very small majority is expecting a 25 basis point cut. Now, with the RBI having already front-loaded rate cuts ensuring ample liquidity, the majority of the respondents we spoke to believe that the MPC may prefer to pause at this stage and assess the full impact of US tariffs and GST cuts before it takes any further action. On the terminal policy rate, 40% see it settling at 5.25%, another 30% at 5%, and the rest expected at the current levels. Now, the majority anticipates that the easing cycle is going to conclude as early as October itself. The stance of the policy, that is also unlikely to be tinkered with at this juncture. As for the macro forecast, 40% expect the growth forecast to be left unchanged, while the rest are expecting a 20 to 30 basis point upward revision, which will reflect the stronger than expected Q1 data. The inflation forecast is expected to be lowered, on the other hand, to about 2.5 to 2.7%, helped by lower food prices and, of course, the GST rate rationalization. Now, beyond the action itself, the language of the policy is going to be very important this time. A dovish tilt is what is expected, which could hint at future rate moves. Now, on the rupee specifically, economists don't really expect an explicit mention of levels, but the RBI is likely to stress that it will not tolerate volatility, stepping in only to smoothen the moves. Now, Forex intervention will have liquidity implications, and therefore the MPC is going to have to weigh that carefully. What else to watch out for in this policy? Well, targeted support for exporters, especially the MSMEs, any sector-specific easing where tariff pressures could bite, possible external benchmark-linked rate extension to NBFCs apart from banks, assurance of ample liquidity, and a clear forward guidance.
Ritu, thank you for that. All eyes, of course, will be on the RBI policy tomorrow. But aside of that, what are some of the other important events to watch out for? Gaurav is here to list out just that. Gaurav.
Well, yes, as we move into the second half of FY26, we have a day full of events. First, let's talk about the global events. We will have Chinese and Hong Kong market, which will be shut. Chinese market will be shut at least for the next 7 days, and the Hong Kong market will also be shut tomorrow. And in fact, now Goldman Sachs says that global hedge fund recorded their largest weekly sell-off in the emerging Asia equities in the last 5 months because of this market holiday. Other than that, from the Indian market perspective, there are a lot of reforms which will happen. First, let's talk about RBI MPC meeting. We will get an outcome. Let's see if we go ahead with the rate cuts or not. So that is a key thing to watch out for. Other than that, India and European FTA will come into effect from 1st October. Remember, this FTA is likely to bring 100 billions of investment in 15 years. Then we have NCPI, who will stop UPI P2P collection request from 1st of October. We also have new online gaming regulations, which will be applicable from 1st of October. And secondly, let's also not forget that RBI project financing norms. Now, they are also going to be in effect from 1st of October. Other than that, some tariff-related changes are also likely to happen. First is that 100% tariff on branded patented drugs for USA, 50% tariff on kitchen, cabinets, bathrooms, vanities. We also have 30% tariffs and 25% tariffs on trucks imports for USA. So that is a key thing to watch out for, how it is going to impact, given that it is going to get into effect from 1st of October. And lastly, let's also not forget that Jain Resources, the new company, will get listed tomorrow. Today we saw new companies dancing in the market. So let's see how it is going to be for Jain Resources tomorrow, given that they are going to get listed tomorrow.
All right. And of course, we'll be watching out for auto sales numbers as well. Thank you so much, Gaurav, for joining us with all those details. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.